Quick video to review our trades on gold, okay, over the last couple of days. So this is going back to my trade that I've done over the last couple of days on the short, okay. Now, I did post a video on Wednesday indicating that we were going lower on gold, and I mentioned that we'll be going down somewhere around this 24.30, which we've now hit right on the dot, okay. Now, I've exited all my shorts, they're posted on Twitter. Let's talk about some of the entries, okay. So on Wednesday, Asia, I did trade some shorts, okay, they're on Twitter. You can go look at those on the Twitter at Forex Recipes. And I said that we would, I would be looking at how London trades. So this is all of Wednesday here, how London trades and how New York trades for those entries. Now, on my video, I said that we would probably come up, when Asia was down here, okay, the Asia trade was looking for these previous sessions. So this was Tuesday PM session lows into this gap, okay, which is what I was targeting for Wednesday in Asia. Okay, so we got that. Now, in that video, I said we would probably either come up to close this gap, okay, in London or New York, which we did in London. And I said that we may also tap into these highs in either London or New York. And in New York, we tapped into those highs, and I did take this long as well. That's also posted on my Twitter, okay? And I've spoken about those entries. So I also spoke in another video after that, this entry that I took on Wednesday, okay, on a shorter time frame. I took it on a 1 minute time frame after seeing the rejection. I've already posted that, so you can look at that on the video, exactly what I've said there. But the easy trade there is after you get this engulfment. 10 a.m. New York time makes the high, okay? That's the high of the week, right? And completely engulfs. That immediate engulfment is a change in the state of delivery. Any pullback now is a repricing to go lower, okay? And these two up candles become the bearish order block, okay? And that is the entry there in that last hour of New York, okay? So I've spoken about this. I won't go into too much detail. And I've shorted up here. Now, as the markets move down, we've made a new order block here. This is the next day now. This is Wednesday. This is Wednesday PM session. But then overnight, I spoke about an Asia setup where Asia, this is 8 p.m. Asia is coming down into these PM session day before order blocks. Not day before, but the afternoon session of the same day. And that was a nice Asia trade entry from any of these lows, okay, to seek a high. And I mentioned this high over here because there's a gap here, okay, where we got that target, but obviously we continued going higher into the day, okay. Now, I've spoken about this entry or setup. I didn't take this long Asia trade on Wednesday night, New York time, because I wasn't looking for longs, okay. And but that was a good setup, and the entry would have been here at 9:30 p.m. because best entries are going to be in that second hour of that 3-hour session. Okay, Asia, London, and New York, they were all 3-hour sessions. Asia is from 8 p.m. to 11 p.m. So 9:30 is the right time if you can get into an order block that's already been validated by going to this bigger order block in the PM session is taking liquidity. If you're coming into that at 9:30 p.m., then that's a good entry, and your target will simply have to be up these highs, okay, where there's a gap. And I mentioned that if you did take that entry on this hypothetical example, that's enough, 50, 60 pips, okay? And I did not take that entry because my bias has already shifted to down. I've already ascertained a target lower, okay? Even though we've come down with kind of intermediate order flow bullish during the first session of Wednesday and then into Thursday, but my bias is down, so I'm not looking for longs, okay? Now let's talk about the what's happening here. After this move down on Wednesday, right, into the Wednesday afternoon, the overnight session, and into Thursday morning, where are we going to? Well, we're going to the bearish order blocks again, right? So we're going back up to the bearish order blocks, taking out all this liquidity, back up to where? Right into these up candles, which is the same entry as the entry on Wednesday, which is a safe entry after having this price displacement with this gap open. When they're coming into that gap here in London, okay? Again, look at the time, 3 a.m. These times are important. Always look for the second hour, okay? Your move is going to be in that second hour or in that second hour, but in the 30 minutes within that second hour, so half time within that second hour. Like here, Asia, this is 9:30 p.m. Okay, when I trade gold, it's typically 9:30 a.m. or 10 a.m. Okay, if it's a London setup, then it's going to happen at 3 a.m. or 3:30. Okay, so this is 3 a.m. makes a high coming into this bearish order block. Okay, into this gap. Okay, you have this consolidation. As soon as you have this down candle, we've got a change in state of delivery because now, after we've come into the high time frame where price is already displaced, we've got a gap, and this is the bearish order block. Then these up candles are simply coming in to give the institutions another opportunity to go short, change state delivery immediately after this bearish engulfment candle, okay? Now, that's another good entry inside of London, okay? But New York will always give us an entry as well. So as the markets come down, okay, notice that's made all these into another nice move down with displacement. We've got a breaking structure here, okay, on this day, which is that Thursday, London, okay? So this is the down candles that made this high. As soon as we go down below that, that's the changing structure, okay? Any movement up now is going to be pullbacks to short, okay? But timing is important, okay? So notice we have New York now opening 8:30, coming into this gap, okay? And then we have the 9:30. 9:30 will always be a great time to look at for entries. This time, it was kind of out of time, so I would expect 9:30 or 10 a.m. to be the high. 10 a.m. came into these highs, but then we continued to going higher up to 11 a.m. At the end of New York session, we came to this gap. Now, what's this doing? This is coming into, this is where price is important, okay? This is coming into taking all this liquidity, okay, for anyone that's already short, into these 3 up candles, which are the bearish order block that were created in London, okay? So that's where I would say is the best place to short, okay? The issue here is obviously time. This time hasn't really aligned. It's usually 9:30 or 10 a.m. makes the high. Here, New York, at the end of New York, which is, this candle starts at 10:45, ends at 11 a.m. The end of New York has taken all this liquidity, okay, into this fair value gap and into this up 3 candles, which are the last up 3 candles in this up move in London, okay? Now, that's probably expected that there might be some kind of manipulation outside of the typical time because this was also a news day, right? There was news at 8:30, which provided a good entry as well. But notice that we didn't go too far above that high. So even if anyone shorted into this fair value gap, right, at 8:30 or even at 10 a.m. when you're coming into these highs, taking this liquidity, the move up at 11 a.m. isn't too bad. But again, it does, I think, stop out some of these early short holders, okay? So there were 2 entries here. The best one was London because that's coming to the higher time frame, bearish order block at the right time, 3 a.m. Remember, I'm already short from up here, okay? So I'm not looking to add. I've already added some significant size on the way down. As you've seen on my journal, I've already journaled my exits on this trade, okay? So that was the best entry in this crawl up. Look at the crawl going up into higher time frame bearish order block, okay? Now, the next entry, if you wanted to take it in New York, was after the breaking structure. These down candles, what are they? They are the order blocks. So if price comes back down into there, we should see price going up. We don't see price going up from those down candles, okay? Therefore, if you continue going down, that is now breaking structure, right? We were expecting it to be low, high, higher low, and a higher high off of this bullish order block, right? These down sequence of down candles is a bullish order block. Well, we don't go higher from there. In fact, we go lower, so that is why that's a breaking structure. That's also the down candle that made the highest high on this day. Breaking structure, now we are looking for a pullback. Then time is important. That can be at 8:30, which we get. Okay, but on a news day, you want to get it, you want to be careful of the news. So we do go down, but at 9:30, which is the right time to really trade gold, or 10 a.m., we do get a pullback that takes out all these highs into this fair value gap and into these last 3 up candles made in London, which are the bearish order block. That was a great entry, okay? Now, this market's continued to go down to the target, okay? So I've taken multiple exits along the way. We can see now today, this morning in Asia, we've now reached what I was expecting, which is that 2430 level. I mentioned on my video looking for anywhere between the 240 to 2440. I did mark out, for me, I like to refine my exits so I can just take them when they appear. This is where I exited, okay, into this gap. So I don't need the best exit, right? I'm not concerned missing this, right? I've called it 2430 is what I'm looking for. And it is a safe target in terms of it's below a level of liquidity, okay? But the market can at any point reverse, and that's why I like to trade with size, go for the easy targets. That's how I trade, okay? So I made a nice chunk of profit in this move, okay, because I shorted from the very highs, right, from up here. And so for me, I'm happy with that trade all the way down to around that level there. For me, that's 300 pips is enough, okay? So I hope that the video makes sense. You really got to go back and look at what I've said on all the videos and look at the Twitter journals. Let's look at a 1 hour chart, see if that clarifies any further. You can see that it's a lot easier to see on the 1 hour chart that where London comes in at this up 3 candles, which I mentioned previously. Okay, these are your bearish order blocks on a 1 hour chart. Okay, very powerful. Take out the high, immediate engulfment of that entire structure. Okay, that's also a breaking structure on a 1 hour chart. This is the down candle that made that high. As soon as we trade below that, that becomes the bearish breaker. Okay, you can see we've remained within that bearish breaker. Okay, this down candle is the bearish breaker. On the way down, we've come back up into it. So that move up into it is expected and is a great entry on the Thursday. Okay, back into the bearish breaker and also into this gap here. So that's a very easy setup, right? You can see that it's just a box is what I want from there. Okay, so you have multiple things there. You've got your 3 up candles, which is your bearish order block. Okay, price comes into this up candle, also mitigating this gap and this bearish breaker, the last down candle. Okay, this is a swing low that makes the highs. When that's broken, market structure shift, the change of state of delivery also occurs there. Any pullback into this gap, into these 3 up candles, or this down candle, which is a bearish breaker, are your potential entries, signatures to look for repricing lower. Okay, so perfect ICT setup there with bearish breakers, also with bearish order block, bearish breaker, fair value gap, and a break in market structure as well. Notice we also go below this swing low as well. Okay, now also notice that on that 1 hour chart, I've spoken about this 3-bar pattern, right, where you've got a 3-bar pattern. You've got this candle that has a wick that's wicking in to some kind of signature bearish or bullish. If it's on the downside, if you're looking for down movements, then you're going to have the wick on the upper end, okay? And then you get this complete engulfment of that middle candle, okay? That is a 3-bar short pattern on the hourly chart, very powerful. Market then comes back into this fair value gap, all right? That's after getting the news Okay, so if you look at a 1 hour time frame, the higher time frames make it a lot easier for you to see the setups. Okay, very easily we can see the 3 up candles here on a 1 hour chart that make this the bearish order block. Okay, we can see we've tapped into that with this move here. Okay, we can see the engulfment, which is the change in the state of delivery. We can see the down candle here. Okay, the last down candle in this move up is the bearish breaker. We've come into that. Okay, that's also all happening in London. Okay, yesterday in New York. This is really called a balanced price range, okay, but I don't like to use that word because it's quite confusing. I just like to call this a 3-bar pattern where you have the initial manipulation, okay. This second middle candle takes out the liquidity of the immediate candle and wicks into some higher time frame signature like a bearish order block or a breaker, okay, and then you get the engulfment. That's the pattern. Can be on a 50-minute chart, a 1 hour chart. I've shown you this previously on a 50-minute chart. I've shown you bullish versions of this, and then at 9:30 or 8:30 and onwards, when the news releases, we get a move into this gap. And again, you get this move down, okay? So lots of things to give you indication of price moving lower. Now, you don't need the best exit. You don't need 300 pips, okay? Any move down to these lows is enough, right? So if we just look at these lows, that's enough on trade. So if we are entering on this or coming to this level here, or this that's in London or here in New York into this fair value gap, we can target these lows, okay? We can target the low that's clearly visible. That there is enough. So if I just measure, let's say your entries here, down to that low, that's 170 pips plus. Right? In that move, you only need to take 50 pips. You could have taken that trade, exit at these lows. Okay? You don't need to get the absolute best low and take 300 pips, okay, to be profitable. All right, so go back, study the chart, study the information I've posted on Twitter, study the videos I've posted, all the different entries that I've done. I've posted every trade throughout the last couple of days and last week on how I've traded gold using ICT signatures. You need to study, watch the videos, look at it on your own charts so that you can learn. Hope the video was useful. I will now talk with you in a future video.